Okay, well, let's also welcome our fundamental guests, Mayuresh Joshi and SP Tulsian join in. Gentlemen, afternoon to both of you. Mr. Tulsian, I want to talk to you about the exclusive that our colleague just broke a while back with regards to Z Entertainment, where we understand that Sony is likely to buy 10 sports from Z Entertainment for almost 2,000 crores. The stock is at a 52-week high, but how much of a positive do you think this could be, considering that their sports business has been loss-making for so many years?
Sonia, in fact, this is what has keeping the shares to move up for quite some time, because if you see the Q1 numbers, post Q1 numbers, I have not been too satisfied with the Q1 numbers, which could be used as a trigger for the stocks to really move up. But exiting from the sports, because we have seen that the company has been struggling, making losses, and that was keeping overall bottom line of the company in the red. And actually the market has been expecting this to happen for last about couple of weeks, and the price also was known in the market that 2,000 crore will be the price at which the deal will get consummated. So this is a good exit for the company, and apart from the losses getting curtailed from here on, company will be able to focus on the core, because the kind of diversion or maybe the leakages of the managerial capability which was going on, all these things can get diverted to the main business of the company or the main channels where they are really doing quite well. So maybe the advertisement revenue or maybe the better programming can give them a better advertisement revenue. So because of the exiting from a loss making and not so related or strategic business seen for the company, this is being received by the market quite well. But I won't be taking a positive or a buy call on the stock, because I think largely, in fact, or maybe I won't hesitate in saying that the stock looks overvalued, because this news was expected or anticipated for the last couple of weeks.
All right, Mr. Tulsian, we will stay on with this discussion. Actually, let me invite Varinder Bansal yet again. Varinder, just lay out all the facts and buzz that you picked up.
Well, this story has been going in for a long time. That
Mr. Tulsian was telling us
exactly. Now, what we hear is that the deal is signed and locked, and this week you will probably hear about the official announcement coming from Z Entertainment. Sony will be, buying 10 sports from Z Entertainment. The value will be nearly 2,000 crore. Now, why it is important, as Mr. Tulsian was also alluding, that 10 sports, the company acquired the first tranche in 2006 and the second tranche in 2010. In the last 10 years, this channel hasn't given anything to Z Entertainment. In case you look at the entire bouquet of Z Entertainment, they've been reporting around 80 to 100 crores EBIT loss every year, in this sports business. Last full year FY16, they reported an EBIT loss of 35 crores. It was only the first quarter they reported an EBIT profit. So this has been overhang on Z Entertainment for the longest of the times. They get 2,000 crores is a handsome money, because I remember the enterprise valuation for 10 sports in 2006 was nearly 750 crores. So 2,000 crores is not a small sum for Z Entertainment. Why do Sony wants to buy 10 sports? Clearly they want to increase the bouquet and a competition with Star India going ahead. IPL is in 2017. If they acquire those 7 channels from 10 from Z, they will have probably sports channel of nearly 9, which will surpass Star India's 8 channels, which will be there. We had a word with the management, and the management categorically said that from time to time we keep on exploring strategic opportunities for entering new businesses or in our existing businesses. However, as a matter of policy, we do not comment on media speculation. But as I said, we are hearing that the deal is done. Likely announcement this week. Good for Z Entertainment. They will be in the businesses which are giving them profits, so the loss-making businesses will be out, and a handsome money will be there. Also, only as a matter of pointing it out, I would just want to point out Reliance Capital as well. That stock, after we did the story, that stock is surging. Okay, now there has been talks in the market that of course Reliance Capital's radio business is on the anvil, and the names including Z has been going around in the market. We don't know what will happen with that, but that is one stock which has moved post we broke the story.
Okay, well, actually, Mr. Tulsian, you want to give us a view on Reliance Capital's move as well?
See, Lata, in fact, in all the ADAG group companies, the monetization plans are there, or has been existing, and same thing is happening in Reliance Capital also. But I have not seen anything getting materialized or the concretized, except for the cement business, which has happened with the Oriental, with the Orient Cement. So overall, yes, these things are likely to happen, but I don't think that I am not too gung-ho on the radio business, because if you really see the state of the or the situation in which the radio players are existing, whether you talk of Jagran Prakashan, or whether you talk of ENIL, I don't think that things are really looking that much profitable for any company. I don't understand the reason for Entertainment to take such a big, because since they are getting this 2,000 crore or exiting from the sports business, which was again more of the prestige or maybe a egoistic situation, they should have, in fact, Z Entertainment should have exited from the sports channels maybe about 3-4 years back. But I don't, honestly, I'm not keeping a positive view on the radio business going forward. Whatever we may talk of, but I'm not keeping positive view. But yes, any debt reduction plan is seen happening, or is being talked in the ADAG group, but we have to see the deal getting consummated in each of the area.
Okay. Mr. Tulsian, Mayuresh, Barinder, do stay on this topic. We will return in a bit and try and get more views. But for the moment, we have another guest joining us from the Motilal Oswal conference. Samit Ghosh, the Managing Director and CEO at Ujjivan Financial Services, has joined us. Mr. Ghosh, good afternoon. Thanks so much for joining. I heard a bit of your chat with Tamal at the conference. Is that right, that you want to stick with microfinance? You don't want to really diversify too much by way of your asset franchise?
No, I mean, it's not that we are just sticking to microfinance. We want to serve the unserved and underserved, and to that extent, we are moving from the group lending business, which is the predominant business today, to more on micro and small SME finance and affordable housing. And we think that is going to provide us the growth in the next 5 years. So to that extent, we are going to, our asset book, is going to change.
So, Samit, hi, good afternoon. Microfinance has been one of your strongest segments. I mean, even in the quarter gone by, you saw a whopping 63% growth. So, when you say you're going to improve the growth run rate, what do you mean? Can you better this 63%, portfolio growth that you're seeing currently?
No, I mean, see, in the next, while we go through the transition, we don't want to grow at a very accelerated pace, But the composition of our growth in the next 5 years will change from pure group finance to, the individual lending which we do for micro SME and for, the affordable housing side.
So what is the breakup now? How much are you lending to the SHGs?
Today, 87% of our portfolio is group lending. Only 13% is in this side, And we expect over 5 years that the portfolio will almost equally be divided between these two types of businesses.
And as you go towards individual lending and SME and affordable housing, will that start to tell on your returns? What will your yield be? Because I mean, SHG, you all make a much bigger yield, don't you?
Yeah, we do make a much higher yield in a sense, but the cost structure is also high. The ticket sizes of loans for the micro and small business and affordable housing is going to be larger. So, the operating costs from that point of view will drop. Even though your, the interest revenue will be lower than what is there for group finance.
Okay, so can you give us some numbers? I mean, what is the margin you are working with now? When you become 50-50, what will your margin be? What is the cost to income now? I think the cost to income now is 45%.
No,
what will it be when you...
something.
Okay, what will it be when you become 50-50?
Cost to income.
Yeah.
The cost to income in the next 2 years, because we are investing very heavily in the transformation process in terms of technology, infrastructure for branches, people, etc., it will go up. It will go up to 60 plus levels or something. And then we expect it to drop down, maybe slightly around current levels.
Okay, so that's on cost to income that will rise and then perhaps drop later. What about your return on equity? Because there is an expectation that that could, trend to somewhere around 13% or so by about FY18. So it could trend lower. Is that a reasonable assumption as you transition to a small finance bank?
See, I can't give you the exact numbers, but I can tell you that both, the return to equity and return on assets during the transition again will drop from our current levels, and it will come back, but I don't think it will come back to the high levels which we were there, as a successful NBFC.
Of course. Okay. Well, just give us the kind of margins you are looking at, the broad numbers you are looking at. I'm not asking you for exact ROEs. As well, even on margins, if you can tell us at the moment, I guess your cost to income, your cost of funds would be, low double digits. How much might it fall to in the years to come as you build up, small deposits?
Well, immediately, Lata, after we convert to a bank, our funding costs will go down to a certain extent because currently we borrow around at 12%. So it's going to come down a little bit because the interbank rates are lower, etc. And then, it will, as we build up our,
Yeah, go ahead.
Build up our retail deposit base, right now I can't just give you the numbers, right. But maybe sometime later I can give it to you.
All right. Mr. Ghosh, it's always a pleasure speaking with you. Thank you very much for joining us with those details. Okay, so at the moment, the Ujjivan franchise or Ujjivan model is really borrowing at perhaps 12% because they're largely borrowing from banks. But then when you have SHGs as your big borrowers, the margins tend to be very good. So in any case, it's a very good, very handsome return on equity even when it dips a bit.
Okay, well, let's get back to our guests because we have a market to trade at this point as well, which is picking up some pace now. So we're at the high point of trade. The Sensex is now up almost about 0.5%. We have Mayuresh Joshi who also joins into our conversation. Mayuresh, the stock of the moment is Zee Entertainment. We were just discussing with Mr. Tulsian about the possibility of Zee selling off their sports business. If they indeed do that, how much of an upside do you see from these current levels of 520?
Afternoon, Sonia. I think the sports business was a drag in terms of the overall consolidated performance. For the better part of FY16, I believe that incurred a loss of around 35 odd crores. And again, I think management expectations was largely to curtail it below 100 crores. So if something like this probably comes through, yes, I think it's a huge positive for Zee, specifically in terms of the loss yielding businesses. And again, I think the intent would be to then focus on the profit making businesses. Secondly, I think in terms of the ad and subscription growth itself, I think with the kind of regional channel foray that they have done and the kind of growth that we witnessed both in terms of ad yields as well as subscription picking up, my own sense is that the earnings growth should be quite reasonable for Zee going forward. So clear disclaimer, I think we might be holding these stocks on behalf of our clients and a retain a positive view on Zee.
Okay. Well, actually, there is another gentleman who tracks the media stocks very closely, who's joined us, Abhinish Roy, Associate Director at Edelweiss Securities, on the phone line. Abhinish, you heard what Varinder broke for us, something that's been brewing for a bit, and now he has more confirmation that it's likely to happen very, very soon, practically already signed and sealed, that Zee will sell 10 spots to Sony. Your thoughts on Zee's current price, the way the market's shot up already?
Yeah, so we remain positive on Zee irrespective of this deal. This deal obviously, this business is loss making for Zee currently. So definitely there will be positive impact on the EPS both this year and next year. Zee has been guiding at around 100 crore loss for this year, although they delivered pleasant surprise in terms of profit in the first quarter. So if the sports business gets sold, there will be 100 crore kind of a positive impact on the EBITDA. But from a longer term perspective, it might be a bit negative for Zee because in the subscription, clearly sports as a business is also very important. So essentially in India what will happen is there will be Star, which has got Lions market share of cricket and most other properties, and now Sony also because of their tie-up will also also start becoming relevant. So they do have IPL, which goes into rebetting next year, and then they have the tie-up with ESPN. So we'll have two strong players, and Z not being in sports from a longer-term perspective slightly negative.
Okay, so just to come back to the point about Sony, why would Sony want to pay 2,000 crores for such a loss-making business?
So Z has got many important rights. Obviously, those rights are of relevance to Sony as they want to ramp up. They do have IPL as the sole important rights. They have other smaller rights. But Z, if you see, has got many important properties like WWE, which is very, very strong viewership after cricket. It is one of the largest. So apart from this, India's cricket matches with West Indies, Sri Lanka, Zimbabwe, South Africa, Pakistan, those rights are also there. So it's loss-making business, but it does 500 to 600 crore revenue. So when you're competing with Star, you would need a stronger bouquet. So that's the whole game plan. Sony, ESPN will not be looking at that small 100 crore loss. They will be looking at how to fight Star, which has got most of the cricket rights, most of the other rights also.
So when you look at it from a Z Entertainment point of view, the stock has already risen about 50% in the last 6 months. How much of this news do you think is already in the price?
So Z is doing much better in terms of execution versus the industry. If you see, industry is growing more like 13-14% ad growth, but Z in most quarters is growing well ahead of that. So they are doing well in regional, most of the channels, and the flagship also, the ANTV is doing well. So it's not because of this cricket, this sports event getting sold. That's not the reason why Z has traded strongly. It's basically the base business doing quite well. So we remain positive on Z Entertainment. Our target price is around 546. So there will be upgrade to the EPS because of the losses coming down. But we remain positive on Z.
Right. Abhinish, we'll leave it at that. Thank you very much for joining us for this quick take on the CNBC TV 18 news break, that this deal is done and dusted for the moment and could be announced shortly. We have many more stocks to discuss with our experts. Let's give you first the closing bell money control question of the day before we take our first break. The question is, Infi is now at a 12 to 15%. Okay, is Infi now a 12 to 15% growth story and not a 25 to 30% growth story? Do you see the stock price correcting? Log on to moneycontrol.com and post your responses. We are back in a minute. Back, and the markets in the last hour have really given us a lot to talk about. It's a fairly bullish market now. The Nifty has climbed over the 8,600 mark, and now it's pulled the Bank Nifty as well into the green. We saw some sharp rise from the bottom in that index as well, and the mid cap as well is just kind of keeping, although it's still at a mild discount to the biggies as far as today's rally is concerned, or last half hour rally is concerned. It's still catching up with 1/3% in terms of gains. A good time is any to get yet another technical advice for you. Sandeep Wagle joins in. Sandeep, good evening, or rather good afternoon. What's the take on the Nifty, and what are the stocks you're watching?
Good afternoon, Lata. I think we are seeing a very clear breakout and a move towards 87.10, 87.20. That would be my target for the Nifty. Stock specific, I would go with a buy in a M&M Finance, stop loss 341, target 364. A buy in a Reliance Industries that is given a breakout, furthermore upside, stop loss 1036, target 1071. And a sell in a HCL Tech, stop loss 773, target 720.
Okay, well, plenty of stocks in the broader markets that are also surging. Delta Corp is now up 8% and has been sitting at a new 52-week high ever since it reported its numbers. In fact, in the month of August itself, Delta Corp is up about 65%. That's the kind of move that you're seeing there. And a couple of other stocks like JK Tyres also sitting at fresh 52-week highs after that fall in rubber prices. So big moves coming in. But SKS Micro, or Bharat Financial as it is now called, will hold an analyst meeting in in Mumbai later today. Abhishek joins in now to give us the key questions that analysts are likely to have for the management. Abhishek?
Yeah, this is the first time, that the company is holding an interfiscal analyst meet. A strong attendance of 10 people from the management side are attending this analyst meet. The key questions on the recent development of Mr. Dilli Raj being arrested in the 2nd of August will be the capability of the company to go in terms of operation, management bandwidth in the absence of Mr. Dilli Raj. Any change in terms of strategy or in terms of responsibility sharing will also be seen. Now they have an approval of raising rupees 700 crores in terms of QIP. So any plans of delaying that further will be seen, will be asked in the analyst meet.
Sure, thank you very much for alerting us that there is going to be a meet, that it is going to be well attended from the company's point of view, and the key questions, of course, that the street is waiting for. Thank you, Abhishek. We will get to our guests in a minute on this talk, but before that, Crompton Greaves as well will be reporting Q1 numbers. So let's have Anisha tell us what the street is expecting there. Anisha?
Well, Lata, we are expecting a decent quarter from the company this time. Now, year-to-year comparison won't be possible because of the demerger of the consumer business of the company and also sale of its international arm. But overall, strong revenue growth is expected. Now, quarter-on-quarter, we are seeing a decline as far as headline numbers is concerned. The revenue is expected to come down to 1428 crores versus 1670 crores. Margin expected to remain around 9% levels. However, on the bottom line, we are expecting a profit of around 50 crores this time versus the loss of 102 crore reported in the quarter gone by. And that is because in the quarter gone by, they had taken write-offs as far as the subsidiary and international business is concerned. That is expected to go away. The company has given a FY17 guidance of 6,500 crores in terms of top line and 450 crores in terms of EBITDA. Need to watch out whether they do well in this seasonally strong quarter or not. Other than that, management commentary on sale of the ZIV business, how's the debt movement going around, how's the cash consideration coming for the business which have been sold out. All these things will be looked forward to from the management apart from the numbers.
Okay, Anisha, thanks for that. So those are many stocks that we're going to keep on our radar and the market as well. Mr. Tulsian, I wanted to ask you about some of these tire stocks. JK Tyres has hit a fresh 52-week high today, and you also have, a couple of others like Apollo Tyres that are surging based on lower rubber prices. Is this a pocket that you would trade in or buy into at this level?
See, Sonia, definitely reduction in the rubber prices are seen positive for the stock, but I won't be taking that as the only trigger to enter into the stocks, because the kind of volatility which we have been seeing, more especially in the JK Tyre having run up by about 40% in this last 40-45 days, or maybe Apollo Tyres having moved up by 15%. But if anything positive or any duty or any kind of protection comes from the government, like a MIP kind of things which we have seen in case of the steel, then that will be seen as a big trigger, because I think the volatility in the commodity prices keeps going up and down. If you see the rubber prices moving up by maybe 2, 3, 4, 5%, then again we will see the stocks correcting. So not on a fundamental basis, I won't be keeping a positive stance, and as such on Apollo Tyres, I see the stock having moved to the to its fully priced level. Even in case of JK Tyres, you have because of the integration pain we are going to see the Kesoram unit which the company has acquired, I'm not keeping a positive stance. But yes, as a trader, see it, having some upside potential for the traders in the near term as well.
Okay. Ashwini, just wanted your thoughts yet again on the markets. The Nifty at 8,600, does it become a stronger buy now? What is the end of day trade?
See, like 20-point declines don't impress me, 30-point rallies also don't impress me. There's nothing too much to read into this. People went short, they didn't get follow through, and it came back. Tomorrow, maybe we open at the highs and again go towards the low. The good news is that we are not collapsing 100, 150 points a day. That means the correction remains mild. That means, people can continue to accumulate on dips. So that is the big takeaway. I don't think this 30-point rally has any sort of conclusions for tomorrow.
Okay. Well, let me get back to our fundamental guests with more questions. Mitesh, what's your take on Reliance Capital at this juncture? They could, of course, gain from the sale of the radio business. They're already taking a lot of activity, a lot of action to delever themselves, get more partners, and they've not quite participated in the NBFC rally to the extent other stocks have participated.
See, I think Reliance Capital, to be very honest, I think after the numbers came in, the stock has clearly been in some kind of an uptrend. We were looking at a target of 530. I think that's the stock is right there. The next one is about 560, and there's no reason to believe that the stock will not achieve that. So I think that traders should just trail their stop loss, hold the stock, and I think look at now 560 as the next logical target.
Mayuresh, from a fundamental angle?
Again, yes, you're right. It has underperformed largely. But again, I think one really needs to understand the kind of business prospects that one really sees from the individual businesses to come through. And one again assumes certain elements to actually do well. So yes, I think because of sheer underperformance, the stock can actually do well. But numbers need to show improvement, which in my belief, if capital markets the way they are functioning and the other subsets of the business improve over the next few quarters, you might see some positive moment happening onto the stock.
Okay, we'll do one thing. We'll take a short break, but we still have about 20 more minutes to go. So when we come back, we'll get you a check on the mood across the dealing rooms today. Stay with us. Things are picking up in the market, so that's what we told you before the break as well. But there are some new entrants now into the uptrend. So we spoke about Reliance, L&T and Tata Motors. Hero MotoCorp is now participating in the action. 3.5–4% higher on Hero MotoCorp, and ICICI Bank as well is not too far behind. And all of this momentum coming just in the last 5–10 minutes. Suffice to say, this is still a buy on every dip market and lot of heavyweights participating. But it's time now for our Monday special Midcap Mania with Nigel D'Souza. Let's find out what is the interesting company on his radar today. Nigel, over to you.
Well, Sonia, the group of companies I'm going to talk about the most uninteresting for the last few years. They come in from the acrylic fiber space. So no one's really talking about it. I really struggled to get some data points on this. But there are three companies that have been buzzing around. They've hit fresh 52-week highs. So I was trying to find out exactly why. These are the three listed companies that are into acrylic fiber. Now, if you just go ahead to see what exactly is the total domestic capacity, currently it is at around 100,000 tons or thereabouts. And all the three capacities should come up for you. The three listed companies, in fact, they have capacities. Vardhaman Acrylics has around 20,000, Indian Acrylics around 42,000, and Pashupati has around 40,000. Minded that these stocks haven't really moved in years, but good to see that these stocks are sitting at 52-week highs. India exports close to around 18,000 tons or thereabouts, and in fact, India imports around 30,000 tons. Both those two figures have been moving. For example, the exports were at 10,000 tons, now they're at around 18,000 tons, and the imports are far higher, but there have been some anti-dumping duties that have been put in. So that's why, in fact, it is at roughly around 30,000 tons. Now, exports, they have been seeing demand coming in from various parts of Middle East, in particular Iraq, China, as well as South America. And you just take a look at the first quarter numbers for all these three companies were absolutely brilliant. So on the top line, there was no growth because it's linked to crude. So on the back of that, on the top line, we're seeing growth for any of these companies, but margins and operating performance, fantastic. This is Vardhaman Acrylics. They're giving you more than 20% margins. It used to be single digit. So that's looking quite good. Profitability as well has soared up by close to around 90% if you compare it on a year-on-year basis. And if you extrapolate it, 15 crores, if they can keep this up, then they should do around 50 to around 60 crores. And in fact, the market cap is only around 380 crores. But they need to keep it up. If you look at Indian Acrylics as well, top line growth as well, there's a degrowth over there. But margins have expanded yet again over there. It's coming at around 13%. That compares with nearly around 7%. Profitability has more than doubled. If you try to extrapolate that number as well, they have done around 10 crores in the first quarter. But I don't know whether they can keep that up. If they can do 30–40 crores, then it will be trading at roughly around 6 to around 7 times or thereabouts. Pashupati Acrylon as well, same is the case there. Margins expansion, while on the top line, there's no growth whatsoever. And if you take a look at the profit, it's up by a good 150%. So if you try to extrapolate that data point and you say that they're going to do a similar run rate, then it'll be trading at around 6 to around 7 times. Another couple of interesting data that I was looking at. For Indian Acrylics, the promoters have been buying stakes. In the last few months, they've increased their stake by close to around 3 to around 5% approximately. And just last week, there was a block of around 13 lakh shares. And if you look at the disclosures, you'll see that the promoters have bought this as well. Remember, this is a stock that was only around 5 rupees just around a year ago. And now it is at around 18 rupees. So just keep that in mind. It's run by a family business. That's a Garg family. And also there is a partner, that's Punjab State Industrial Development Corporation. They have around 13.5%. For Vardhaman Acrylics, everyone talks about Vardhaman Textiles. But this company as well is rather interesting because the cash that it has is nearly around 35% of its market capitalization. The current market cap of Vardhaman Textiles, it's only listed on the NSE. It's roughly around 135 crores. The market cap is around 380 crores. So that's supporting it. And finally, there's one big risk really, and I've been tracking the key raw material. It's known as ACN and it's known as acrylonitrile. Over there, the prices have moved up by roughly around 25% in the last 1 month. It's a crude derivative, crude oil derivative, so it'll be moving in tandem with it. And in fact, I spoke to a couple of dealers and in fact a couple of companies. They said two things can happen: either it'll compress the margins or it'll support the top line. So watch out for these three stocks. Back to you.
Okay, that's interesting. As always, thank you very much for that rich bit of information, Nigel. Well, Mr. Tulsian, let me toss this straight away to you. You take a lot of interest in these kinds of companies. Is anything interesting to you as well?
Lata, we have only been giving call on the Pashupati Acrylon because if you really see the kind of performance the company have posted for Q1 as well as for Q4, except for that, we are not keeping a positive stance on any other stocks.
Mr. Tulsian, I also wanted your advice on Bharat Financial or the old SKS. There is as Abhishek was telling us, an analyst call. How would you approach the stock itself?
Lata, again the trading momentum is seen quite high in the stock, and if you take a fundamental view, then I am not convinced on the purely on the fundamentals because you have the very better peers available, maybe like Equitas or maybe Ujjivan, or one can even place Manappuram and Muthoot Finance also in the same category. But if you really take the momentum or maybe the trading grip on the stock, I think that is quite good. But the stock having corrected from a level of 950 to as low as 800, and now at the current price, I don't think that much weakness is seen off. Let's see what comes out from the analyst meet and what is the outlook taken off. But from here on, I will only be taking a positive view as a trader and not as an investor.
Okay, well, the stock that's really in focus right now is Reliance Industries. Just pull up that chart. It's up almost about 2.5%. The volumes are picking up, and it's really it's sort of spearheaded the rally that we've seen in the last half an hour or so. And now Reliance is just 3% away from its 52-week high of about 1,090. So a lot of heavyweights really participating in the action today. But let's get an insight into the dealing room chatter. Nimesh Shah is here with Trader Talk. Nimesh, you've been at the Motilal Oswal conference. What has the feedback been today? I mean, most of the speakers have indicated that the feedback is very positive, but what's the sense that you're getting?
Hi Sonia. So honestly, I met a lot of fund managers, both domestic and global. That shows that there is a lot of interest yet for India. Clearly from a global perspective, a lot of people are looking at buying into the Indian stocks, so whether it's large cap, whether it's mid cap. It's still a bottom up approach. People aren't looking at the top down yet. But clearly, from a liquidity point of view, that's something which a lot of fund managers do admit, that it's a liquidity which is driving all asset classes, including Indian equities as well. What is heartening is the fact that for most global investors and local investors, the domestic macros are now coming to place. Whether it's monsoon, which has been pretty spread out, whether it's GST, which got passed, even in terms of earnings, a lot of fund managers do believe that earnings has actually turned around in this quarter as well. So the domestic macros is in place, which suggests that the downside looks protected to most of them, but maybe the valuations are stretched in many of the sectors and stocks. So clearly it's going to be a stock specific approach for most of the fund managers at this point in time, but clearly the amount of participation from the global and local investors do suggest that there is a lot of interest towards India. In fact, I met one of the largest sovereign fund manager who basically manages close to $500 billion into global assets, and even he was very bullish on India. In fact, there is a bit of an indication as well that probably in the next couple of months from now, close to $2 to $3 billion of money is likely to come into Indian equities. So from an FI perspective, the mood is very, very strong. It's very stock specific though, but it looks like from a macro point of view that the downside looks protected, and probably by the end of the year, we'll probably see new highs for Indian equities.
Oh yes, thanks a lot for that. James Sullivan of JP Morgan was telling us much the same. In a world starved for yield, where there are negative yields across so many countries, clearly growth of any kind would be something the world is hungry for. So the valuation battle is at the moment still being fought, and it's growth that is winning the battle at this point in time. Let's quickly get through the set of buzzing stocks that Varinder Bansal has picked for us, and then we have more questions for our guests. Varinder.
Well, some of the new names which I'm picking up today. Look at one stock which is DCW. You know, in the last few days, this stock is seeing some accumulation happening in, and this is one stock in the entire chemical space hasn't done anything since the last 6 months or 1 year. So keep an eye on DCW. Hinduja Founders is seeing some action today. There are good volumes built up on that stock, so keep an eye on that as well. Shreyar Industries, Phase 3 Exports, Neo Infracom are other new names picking which are moving up today. In the small cap gainers, it's the old tech stocks like Merck Electronics and BPL which are gaining. Nirvakra Paper Mills and some of the plast companies like High Tech Plast, Tokyo Plast International also moving up. Duke Offshore surging up post the news. Malu Paper Mills, Maruti Infra, Mahamaya Steel has been just moving since last many days. Moraji Textile, Uniply Industries, Gujarat Automotive, NDTV. Look at the volumes on NDTV. Nearly 10% equity change hand on that stock today. Mukta has been surging after the company has been opening some of the multiplexes in various areas. Amerotech, TGB Banquet, Patel AIM, Donner Industries, ADF Foods, Kanpur Plastic Pack, Datamatics, Associated Alcohol. The weekend is over and most of the alcohol stocks are buzzing today. Centrum Capital, after the Doha Bank tied up strategically with the company, the stock is up 10%. Dhoot Industrial Finance, Fortis Malar Hospital continues to be on upper circuits, now 10%. Piramal Phytocare, Roto Pumps, and the mid-cap gainers, apart from all the tire stocks like Balakrishna and JK Tires, Delta Corps continues to surge after stellar numbers reported by the company in the last quarter.
Okay, Varinder, thanks for that. So a whole host of new buzzers, but let's wind down trade. We have about 10 more minutes to go and our guests are still with us. Ashwini, wanted your thoughts on the big mover from the large caps, which is Reliance. I mean, that stock has gone up now 15% from the lows that it hit in the month of May. Do you expect more trades on the upside?
See, the best way of trading Reliance is to buy when it gets beaten up. And now when it's heading towards 1100, you tend to sell because it hasn't gone past the range it's been trading for many months and years, which is basically making higher tops. You have basically a top at 1070, 1080 and bottoms which are rising. At some point this 1080, 1100 will get taken out, and that's when the big move will happen. But till that happens, I think closer to 1080 thereabouts, you should take some money off.
Okay. Well, Deepan Mehta has actually also joined us for the last few minutes of trade. Deepan, good afternoon to you. Well, what's your take on the mid caps at this juncture? What are you preferring even at current price levels? Do you see value?
Not really, Lata. I think we are just trying to assess the situation, and a lot of stocks which are on our buy list and which a lot of clients have already invested in have really zoomed up over the past few weeks or so. And we do find that the margin of safety in a lot of quality businesses has kind of narrowed down. So we like to just wait and watch, maybe look for some more time-wise, if not price-wise correction, and look for entering into stocks only when we feel that there is a little bit of comfort as far as the valuations are concerned. At this point of time, the price earnings to growth multiples are really on the higher side, and you could have a downturn pretty much any time around the corner. So we're waiting for some sort of a correction before we start putting more money to work in the market. At the same time, I think what is also concerning us is that many sectors are getting off the radar as far as long-term investors are concerned, the likes of say technology or large cap pharma for that matter, and even telecom. So we're having a situation where there is liquidity in the market, but the quality businesses which have created huge wealth in the past, the fundamentals over there appear to be slightly deteriorating on long-term basis.
Okay. Deepan, what about the stocks of the day? Tata Motors, Z Entertainment. Let's start one by one. At Tata Motors, would you put more money at this price? I know you haven't invested in it for a while.
Yeah, I think the market received the results very well, although we were a bit disappointed with the numbers, but the stock is up, so market's always right in that context. But as I said, I think, right now the mood over here is to just kind of, wait and watch. Tata Motors also has given spectacular returns over the past, 2-3 years or so. And again, I think trading on the higher end of the valuation band. So just like to wait and watch. And there's a lot of uncertainty as far as currency movement and operations of GLR are concerned. So as I said, I think again in Tata Motors, as I said, for a lot of other companies, the margin of safety is not there. So just like to wait and watch on Tata Motors. And the other company we spoke about was, you were asking about, was?
Entertainment. Z Entertainment.
Yeah, Z. I think that's a good idea in the sense that, yes, that's right. That's an emerging, it's a good idea for investors to look at quite closely, because if the sports business were to be sold off, then that's one, laggard within the divisions of the books of the company. And I think they've done pretty well as far as new channels are concerned. And clearly, I think in times like this where there is rising domestic consumption, media companies do tend to benefit from higher ad spends. So my outlook on Z would be a bit more optimistic than some of the other businesses that we're looking at.
All right, Deepan, just coming to you in a minute. Let's get our BTST or STBT calls from our technical experts. Mitesh, you go first.
See, I think Apollo Tyres, which started the day well, is also ending the day well. I suspect the momentum should be there for next few days. Buy this one with a stop below 180 for targets of around 190 for tomorrow. The other one which I like is Amara Raja Batteries. I think that's one stock, which has been range bound, but from the lower end of the range is trying to head towards the upper end. So buy this one with a stop below 910 for targets of 935.
Ashwini?
See, NBFCs and tires both have started a sector move today, so both places people should look at. So M&M Financial is a buy with a stop of 344, target of 362. Reliance Industries is a buy with a stop of 1040, target of 1085. And Heritage Food is a buy with a stop of 720, target of 800.
Okay, so tire stocks are something that a lot of people are interested in. Dipan, would you enter into this space, the tire space?
No, not really. I think the best years as far as margins are concerned are behind the company. They've taken full benefit of the lower rubber prices, and we've seen these companies also deliver decently in terms of volume growth. But now I think it's going to be business as usual as far as tire companies are concerned, and considering the competitive intensity within the industry and the fact that there's already the threat of imports from China as far as tires are concerned, I wouldn't like to pay a higher PE multiple for these companies. And typically I think the growth rates are in that 10 to 12% type of long-term growth rate which the companies have been able to deliver. So view on tires per se is not that positive.
Okay, well, I wanted to ask about Crompton as well. I think I forgot to ask Mr. Tulsian that results due today, Mr. Tulsian, your view on the stock?
Lata, I've been keeping positive view on the stock because for the two reasons. Firstly, after the restructuring, if you really see the company, the management has said that they will be making the company debt free now of the purely of the electrical company, and that is seen quite positive. And they have been seen aggressive in exiting from their overseas business, which has been seen a big drag. I'm not expecting too much coming in from the results, but they won't be bad as well, because if you really see the distribution T&D space, that has really been doing quite well, and company has a significant presence in that space also. So I'm not having any kind of complaint coming in from their domestic business. One has to really keep an eye on the European business, what they are performing there, and if that also shows any kind of improvement, I think this is seen quite positive. And the way the stock has been accumulated by the strong hands in this last 2 or 3 months, I think that momentum is likely to continue. In fact, if the stock corrects post the numbers also, though it has corrected by about 6-7 rupees in this last maybe 1 week or so, so that makes a good entry point. Maybe at 78, 76 to 78 could be a good entry point.
Okay. Apologies, the results are tomorrow, I'm sorry.
Yeah. The Crompton Greaves results, yeah, we'll keep an eye out on them, results coming out tomorrow. But we also have a couple of more stocks in focus. So before we wind down trade, the IT stocks are the ones that were really sulking today. So Wipro has hit a fresh 52-week low, and even in this rising market, names like HCL Tech, etc., go home with 3% cuts. Mayuresh, what do you do with this pack? Do you completely stay away from IT stocks? Do you trim your positions and move into other names, or do you buy into some of these names like Infi?
Now again, Sonia, I think as we have discussed, the underperformance for these stocks will very well continue over the next few quarters. What they delivered in Q1 was marred because of wage and visa high costs. Q3, Q4 are going to be again marred because of discretionary spends being determined and what really happens out of Brexit. And again, I think from the Inficon call, the Brexit fallout seems to be very, very evident at this point of time, with some cuts happening in terms of order flows and order wins. Secondly, I think in terms of core valuations, again, they've become extremely attractive at this point of time. So Infi actually trades around 13.5, 14 odd times, HCL Tech around 12 times. And again, I think it does become an interesting proposition for long-term investors. Though my own sense is that I think a staggered way of looking at these stocks over the next few months is the best way to look at this. But largely, I think the underperformance for this sector might very well continue for the better part of this year.
Yeah, actually, the way in which Hexaware, Persistent, all these stocks have fallen. Actually, we have been concentrating on Nifty, on the big stocks like HCL Tech and Infi, but it's been pretty much an across-the-board fall that we are seeing in several mid-cap IT stocks as well. But we're just a few seconds away from the markets itself closing so quickly. It's been actually a good day of trade for the bulls. The early morning trending lower market in the first 1 hour, if it were bought, it would have given a lot of gains for the intraday trader, and you can't say we didn't warn you. Ashwini did guess that buying the dip would have worked, and he said that again, I think at 10 o'clock. So market sitting actually at the highest point of the day. Yeah. So it's a strong finish. We will have to see whether this is backed by FII buying, because we've seen a lot of sulk in the European market. So that's the caution. We have to wait and see. But at the moment, the trading bulls or bullish traders are the ones that are holding the initiative as we get into close of trade. They're closing absolutely at the highest point of the day at 8620, as it were. That makes it over 0.5% in terms of gains. And the biggest gains were clocked by the Tata Motors duo. Tata Motors goes with a 4.2% gain, and Z Entertainment has even surpassed Tata Motors. So a lot of trader buying in the last half hour of that trading. About 0.5% it put on weight just in the last few minutes, as it was. Z Entertainment goes home with a 5% uptick. Hero Motors done very well as well, 3.3 up. Reliance, of course, actually that's the heavyweight that's pulled the Nifty in a big way, 3% higher, and a third of it came in the last few minutes. Hindalco is up about 2.5%. L&T, ICICI Bank, Adani Ports, Bajaj Auto, Bank of Baroda, NTPC, Tata Steel, Yes Bank, SBI, all of them have pulled in their weight, giving a 1% gain, and the sulk came, of course, from the IT space. HCL Tech, Wipro, Tech Mahindra, all of them did quite badly, over 2% in terms of cuts. As did Lupin, actually, that's down 2%, and HDFC Bank also was singly responsible in pulling down the bank Nifty, although it moved into the green because of ICICI Bank. HDFC Bank itself ends with 1.5% of red.
Oh yes, and in fact it was a pretty good day for the broader markets as well, Lata. The mid-cap index up about 0.5%. You know what, the market breadth closed in favor of decline, so it was not as good a day as you might want it to be, but nevertheless there were plenty of opportunities to buy. The space to be in clearly was the tire stock. So you had JK Tires that hit a 52-week high, you had Apollo Tires that surged about 4%, and as we told you earlier, the rubber prices have fallen significantly, 10% fall in rubber prices since the start of August, and that's really helped. Even Balkrishna Industries, a very popular tire stock, the company manufactures off-the-road tires, so that, as you can see, was up almost about 6%, a new 52-week high over there. Apart from that, mid-caps like Berger Paints, V-Guard, Whirlpool are stocks that hit 52-week highs, so pretty good in terms of momentum even in the broader markets today. On the downside though, Crompton Greaves ahead of its numbers was down about 3% odd. Indiabulls Real Estate down about 2-3%, Jain Irrigation down almost about 1.5% odd, but not too many to complain about really. On the upside, names like Delta Corp also has been hitting new highs. That stock up almost about 9% odd. Mr. Tulsian, come in on this name, Delta Corp. I mean, the stock has now doubled this year, trading at about 160 rupees. Do you think the move is unwarranted, or do you expect more upsides?
Sonia, why to talk of having doubled in this year? One should say that this has doubled in this last 3 or 4 months only, and the kind of momentum, honestly, which we have been seeing, I'm unable to accept this kind of up move. Because if you really see the licenses, casino licenses coming in for the new hotels and all that, or the new property which they've started the operation, even if you factor in all these things, but it is difficult to take an assess or assess the movement when the momentum is seen in the stock. But on a fundamental basis, I don't see honestly this price as justified. Yeah.
Okay. Well, I wanted to ask Dipan as well. Dipan, what will you follow IT stocks very closely. Along with Infi, a bunch of mid-cap IT stocks have also fallen. What are you picking from the rubble, if any?
No, we are not picking up anything from the rubble. In fact, now we have virtually zero weightage in IT stocks, with the exception of maybe Tata Elxsi and 8K, a little bit of Persistent Systems. I think we are more or less out of all IT stocks, large cap as well as mid cap. I think there is these stocks are in a long-term fall over there, and clearly the business models are such that they're not able to pass on cost increases, be it increments or visa costs, to their customers overseas, and volume growth has clearly become a major problem and a headache for these companies. Base effect also is coming into play. And unlike in the past few years where rupee depreciation used to come to the aid, I think the rupee has remained quite resilient over the past several months or so, and going forward also the outlook for the rupee is not that pessimistic. So I would say that investors should clearly have a hard look at their IT portfolio, and even at these levels it may make sense to sell off the IT shares, be it large cap or mid cap, because I think it has a very high weightage in several portfolios, and that could be a reason for underperformance as far as investors are concerned when they benchmark their portfolio returns to the Sensex, Nifty or mid cap index returns.
Okay, gentlemen, we'll leave it at that. Thank you for joining us, and it's been a rather good day for the bulls. It was a dormant day throughout the session, but only in the last 1 hour the bulls really got back into action, and the Nifty closed with gains of 0.5%. So good start to the week, really. Our closing bell money control question of the day is a comment that came in from Ramdev Agarwal of Motilal Oswal. He said Infosys is now a 12 to 15% growth story, not a 25 to 30% story anymore. Do you see the stock price correcting? Well, we do have a couple of responses, I guess. Santosh Nair of moneycontrol.com is with us.